right, welcome back, YouTube. So I wanted to take a deeper dive into the really just the economics of what's going on here because I've gotten several comments as stating that, oh, it means nothing if we get to 10 cent and stuff like that. So we're going to prove that to not be true. And we're also going to prove how important it is for us to actually reach that level. So a lot of times if I'm talking about and using analogies like filling the bowl, support and resistance, looking at retests and stuff like that, sometimes it can be a little confusing. So we're going to take a more a little bit more colorful, but a more famous approach here. So I have the Fibonacci up here. And what we're looking at is I did it from our lowest point in the previous trend to of around, I think, like 496 up to our previous high, which would be the one right before, I believe, up until Elon purchased Doge, which is around like a 15-cent run. I think 1596, if I'm not mistaken. So if we put those parameters in, what we're looking at is, and this is why the mid-9 range, and I was saying that, if we break through this, this is going to happen. This is going to open up the door to that run. Is because currently right now, if we're looking at this zone here from like the 0 to the negative 382, that is a range from 796 to roughly right where we keep bumping our heads right now, which is that mid-9 range. So why this is important is because once you're able to break above this, this is going to be on the high side. Once you break above this, you are now using this as a floor. You can have, if you come up here and you start to like lose momentum or some liquidity leaves the market and stuff like that, you can certainly have retracements back inside of this zone. But typically, you can even overshoot a little bit because you can see down here, this is not uncommon. When we had that liquidity grab, went back down, retested, came up, bumped our heads a couple times, even dipped below out of the zone before gaining momentum and then coming up. You can see a repeat here, but the important thing is it's not this like wide open territory where we were talking about having those gap downs, because you can have the gap ups on the candlesticks, which is more of a micro inside that trend. So if you're looking at daily candles, like on the weekly or something like that, if you're trading, you can have those gap downs, just filling that void on the candlesticks for like the small term, the short term. But on a bigger scale, if you're looking at like a year-to-date chart or something like that, you can have gap downs and zones. So that can kind of give you like a macro approach. So, or gap ups and zones. So this is kind of where we are right now, because we're at the threshold, literally here at the 0 line between having this opening up this territory here for this run. This is pretty much an elaboration on the video I made yesterday. This is opens up this territory here, and this puts us at like 1114, 1113. So this opening up this here gives us another penny and a half. And yeah, obviously you can still have some waverings in here, but it opens up that territory. And then now you have the opportunity to say, okay, well, if we do have a retracement, it's not somewhere back down here between like 875 and the high sevens. You now have another floor coming in, which, and again, to make my point, it is certainly better if we don't blow through these resistance points. Us coming here and hesitating on the long term is actually a good thing. So if you're looking at here and you're saying that, okay, well, is it going to break back? Is it going to break down, or is this alarming or something like that? You don't want it to come through here and just blow through this zone in one candle and come up here to 12 cent, because that opens up the window to have that on the opposite side. What you want is a battle here, some buys, some sells coming in. And what that does is that gives people, traders, investors, institutions, they're now all going to have different entry points at this level. So you'll have some people whose average is going to be the 952. So if we have a retracement back here, there'll be a group of people who are comfortable saying, okay, well, I'll make a re-entry here because it's not going to move my DCA, or this is my current average, or it's close to my current average. I feel comfortable buying at this price, versus if you have a candle come through here and it just blows through this zone and nobody basically has an average at this zone. So you have that retracement back down here to where people are more comfortable buying, which is where they've already bought. And that's really something you have to kind of keep in mind when you're looking at a chart. People are comfortable buying where they've already bought. Everybody wants to feel like they got a good deal. So nobody wants to pay for something and then come back a few days later and pay more for the same thing. Everybody wants to feel like they got a good deal. They want it at the current price that they have it or better. So when you have this battle going on at this zone here, that's actually a good thing if you're talking about building strength in the floor, because I know the term "this is the new floor" and all that kind of stuff gets used very loosely. But if we take a deeper look into things, you have weak floors and you have strong floors. So the question is, how strong is the floor? So this is really just a strengthening of the floor here. If you're taking a look at this these zones. So sorry to go off on that rant, but I just kind of wanted to explain that a little better because it seems to be some confusion. And I know some people have been waiting or even not paying attention to Dogecoin until it starts trending and starts moving. So I kind of want to educate as many people as possible. So so pretty much on the upside, yes, that opens up that territory here, and it'll give us some balance here before we can even think about retracing down to some of these other levels. So I'm not opposed to a battle right here before breaking through. Remember, the stairway to heaven is better than the rocket ship. Let's take a look here at the shorts. I don't believe they've come in yet. They're up, but not moving. Yeah, so no significant spikes from shorts. Doge is moving, I guess right now as organic as can be. No objections just yet. We'll see once we get into double digits. Let's take a look here at Bitcoin. Oh, Bitcoin's been going to the heavens. Yeah. Over 44,000 now, headed toward 45. Money is still flowing into the market. I believe this is a lot to do with the ETFs because I'm going to do a video breaking down the ETFs and what that means for crypto. So kind of look out for that this week. But I believe the ETF news, as long as that lingers, more capital is going to flow. It's going to give time for more capital to flow into the market because a lot of people are going to want to take positions in actual Bitcoin. So that way it's not necessarily trading paper. And of course, how the SEC decides to regulate this in their upcoming case. They have a very important one with Coinbase coming up in January. And that's going to decide if it's going to be a security or not, and then which platforms can actually even offer the ETF. Because if it's in the ETF, they're going to say, hey, this is clearly a security. And now we need a combination of brokerages to actually offer the ETF versus just selling Bitcoin. So that would eliminate a company like Coinbase from even being able to sell Bitcoin, the Bitcoin ETF. But a company like Robinhood, since it is a brokerage as well, would be able to sell the Bitcoin ETF and Ethereum ETF and stuff like that. So it's a little tricky. I'm going to break that down coming up this week. But I believe these are all catalysts for a lot of the liquidity coming into the market, because another question is how much volume, how much money how much, I guess, the percentage of the institutional money that's coming into the market is going to be directly into Bitcoin, directly into Ethereum, or is it just going to be primarily into the ETFs? Because if you compare it to what happened to gold, it was a huge multiplier in the amount of money that went into the asset. So, and that would obviously send Bitcoin well over 100,000, Ethereum probably to 10,000, and God knows what for the top 10 crypto, what that would mean for Doge, Cardano. It will just mean a lot of capital flowing into the market. So these are all things we have to kind of pay attention to as far as for these catalysts. But overall, I believe this is a positioning taking place, a great positioning, and we're going to have to make sure that we are doing our due diligence and making strategic entries, because I believe, I'm spelling those wrong. I believe that we may not see those lows again that we've seen over the last couple of years, which is when we would come down and grab that liquidity, especially something like a Doge. I don't think we're going to get sub $20,000 Bitcoin again this cycle. I don't think we're going to get sub 5-cent Doge again. So we're probably going to hang out around these ranges, and then like these liquidity zones that have been for the bear market, we're going to have to open up a new zone somewhere up here as we are where we're going to grab liquidity at, because when we're on a tear like this, the question is, okay, now like what we're talking about at the beginning of the video is how high are we going to go? And then when we do have our consolidation, when we do have our pullback, where are those liquidity zones are going to be? And this kind of alludes to what I was talking about at the beginning of the video, is this opens up the conversation to have this as a liquidity zone. So, giving those investors, people who are acquiring right now, an opportunity to kind of come back in and act as a floor when we're looking to grab liquidity before you're talking about retesting and breaking out of this zone into the next one. Because you break out of this one opens up the next zone, which I believe is a little over 12 cents, almost 13 cents, headed toward 13 cents. And then you have a much bigger zone here, and you're far more likely to get a pullback and kind of grab some liquidity here. And then, of course, we'll have to readjust this. But that's up to, I think, almost 16 cents in that next one. But that's 2 zones from now. We'll cross that bridge when we get to it. But this does open up the conversation and that avenue to make this possible. So that being said, that is my Dogecoin price update. So when you see somebody say Doge to 10 cent, it means absolutely nothing. You are completely wrong. And the charts are saying that it actually means a lot. So let me know what you guys are thinking in the comment section. If you're purchasing, if you're sitting on the sidelines, or if you have something you want me to cover in specific, I'm open to suggestions. I appreciate all of you. Subscribe to the channel if you have not, and I will see you guys in the next video.